Good morning, everybody. It's the 22nd of February. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning.
How you doing?
Yeah, not bad, thank you.
All the twos in the calendar today.
Oh,
2-2, 0-2, 2-2.
wow. That's not bad, is it?
Well, at 22 minutes past 10 tonight, it's going to be really fun.
Oh, so do you think something's going to happen?
It's got to, hasn't it? All
Yeah,
those twos. It's going to blow
yeah.
something up, surely.
Oh, don't say to blown things up.
No, like
I had.
Millennium Bug style, you know?
Oh, right. Okay, that's all right. Yeah, I was thinking with the Russia-Ukraine situation. Don't want to talk about that.
No.
I, I had a message from my brother on Skype yesterday, and it said "boom," and I wondered what he's talking about. So I said, "What's happened? Is it Russia?" He said, "No." It was
Oh,
like something completely different.
oh right, okay. Okay, well, that's a nice segue into the headlines then, because obviously everybody's talking about Russia at the moment. The fears continue to intensify. During Monday's session, Russian Putin would announce a decision to recognise the separatist-held regions of Ukraine. After the European close, Putin confirmed that Russia would recognise Luhansk and Donetsk. There was strong criticism of the move by the Western countries, and threats of sanctions would be imposed. Markets were concerned that the move would lead to an escalation in the conflict. Been bouncing around quite a bit. So obviously the US markets were shut yesterday. And I think the announcement that came out was just a couple of minutes after the US futures shut, when they were closing pretty much on their lows. Um, so we've seen a bit of a bounce back today on the equity markets. I guess we'll come on to those shortly. In terms of what else we saw yesterday, there was a bit of risk appetite which gradually deteriorated on Monday around these concerns in Ukraine. There was fresh demand for defensive assets, including yen and Swiss franc, whereas the euro lost some support, although that's looking um, pretty bullish today against some of the currencies. Again, we'll come on to shortly. On the UK side of things, the PMI Services Index posted an 8-month high this morning. The data underpinned expectations that the economy was rebounding quickly from the Omicron variant and that inflation pressures remained strong, which also maintained expectations that the Bank of England would raise interest rates further. However, the Bank of England are coming under scrutiny about their influence over the market. The Deputy Governor Ramsden, who voted for a 0.5% rate hike in February, will make a speech today. Governor Bailey and other MPC members will appear before the Treasury Select Committee on Wednesday and will inevitably be grilled over inflation developments. Eurozone sectors also strengthened yesterday, so the ECB will be taking note of the inflationary pressures as well. Obviously, they haven't done anything yet, and no immediate indication that they'll be taking any action either. So let's get stuck into some charts, Steve. What's catching your eye this morning?
Yeah, like you say, that we've had this sell-off late last night, just after the US close, and FTSE's rallied back and sold off again overnight. But we've had this morning European Open rally. So over the last, you can see over the last hour or so, FTSE formed this morning star formation and rallied higher, and we've taken out the sort of where it pulled back to at midnight last night. So still under pressure, but we can see on the daily chart for the FTSE, it looks like we're off to a decent start. I'd still wait to see how things transpire this morning, because obviously the escalation in events last night, just Russia acknowledging the two separatists parts of Ukraine has allowed Russian troops to move in. So it's not looking, that doesn't bode well. Again, we can see it on the DAX. We've had this sell-off down to 14,300. We've taken out the support, which we have highlighted for, well, a good few months now, if not 6 months, 14,827. For me, this will be key resistance now. So even if the markets manage to rally back, they'll find it hard to smash their way back through this 14,821. There's the bounce back. Well, I'll tell you what, if I look at maybe the shorter term charts, it sort of gives you a little bit more color on what we saw basically yesterday, this really aggressive sell-off, little stall around lunchtime, and then the additional sell-off and the breakdown this morning, which we're recovering from now. But there will be resistance to run into on the DAX side of things. Support comes in at 14,300. We're trading at 14,600. So we've had a 300 point rally in the last hour. I mean, that's pretty amazing turnaround. Whether that can continue or not, I'm not so sure. Similar to the Dow sort of like broke through support at 30, well, just around 34,000, just under 34,000, 33,900, and that stalled at 33,483, and again, that's had a 300 point rally. We're trading 300 points higher than that, trading at 33,775, but you can see that the overall short-term trend, as well as the sort of like medium-term trend, is lower. Similarly, Nasdaq, we broke through the support at 13,800 and have been under pressure now. Got down to just below 13,600, and it's rallied back from there. Resistance comes in now at 13,755, and then further resistance around about 13,900. The reaction from the 4,255 low, I mean, if you still think about it, it sounds like we're talking about this huge sell-off, but we're still above the sort of like the real sort of big levels, the 4,000 level that we talked about in the S&Ps not so long ago. This is a weekly chart, and look, you can see the rally higher that we've had, and it's just a normal correction. So
We haven't seen many tops form like on a rounded basis, though, have we? Like that in the past? Well,
no,
in recent
yeah,
times.
it's definitely sort of like head and shoulders like, isn't it? I mean, just taking it up to the left shoulder, get this neckline in, the head here, right shoulder. I mean, that does look pretty convincing. We've still got to test this neckline. So
It's a downward sloping one as well, which would
yeah,
tend to be worse.
yeah, that I'm showing you on the weekly chart, but we've been highlighting it on the daily chart for quite a while now, and you can see what we did on the daily chart. We sort of like took a level, ignored this spike, and took a level across, and it brought this 4,272 level into focus. It was a low on a number of days here and a couple of days here, although we did get this extension lower down to 4,220, which would be, breaking down there would be a pretty serious one. I think we highlighted it on the Nasdaq, and it was a much more downward sloping. We basically we took that into account, and you can see we're just the sort of like the neckline, you could say, comes in at around about just below the low today, and it is downward sloping, as you said, which can be a lot more aggressive to the downside. Yeah, I mean, the measured move target for this head and shoulders formation is back to this congestion area that we had all the way back in September 2020, around about 10,700 level is the low there. Measured move target comes in at 11,000. So is that the dog jumping up and down on your computer, Joe? I've lost Joe. I think Joe's died. You all right, Joe? He's not happy. We taken a look at the China 50, and we can see that this level that comes in 14,511. It's a level I've been talking about for a long while now, and we reacted off it on the 28th of Jan, reacted higher, got up to 15,300 and have been capped there. So the China 50 really reapproaching that really key support level, and yeah, whatever happens there will be very interesting indeed. Moving on to cryptos, Bitcoin remains under pressure. This is the daily chart. We can see we've seen the sell-off over the weekend and into this week. Support coming in here at 36,300. Below there, we've got 33,000 as support, but the key one is the 28,800. Does feel like we've got the potential to retest this unless we get some whales coming in and helping support this. Hello, Joe. You're right there, mate. We were a bit worried about you for a
My
second.
computer just fell down from the shelf that it's in the desk. It just
It looked like you collapsed on the desk. It was like the video froze with you, like with your head on the desk. I was about to send the paramedics out. I've just covered off crypto.
okay.
Looking at oil's having this extension higher. We can see the sort of the turnaround over the last 3 days. We've had a gap open this morning as well on this chart, which is pretty interesting. We saw this sort of like breakaway gap 92.44. When market reopened, we're right the way up here. So yeah, looking on this chart, looking pretty aggressive, taking out the high up to 94.60 on WTI, and on Brent crude we've been up to 96.55 with that gap there. So at some point that gap will get filled, but there's no guarantee it'll get filled anytime soon. This really is seems to be like a one-way street at the moment, with the escalation intention in Russia. So how has gold done, this safe haven yellow metal that we always seem to run to in times of stress? Well, it's done pretty well over the past week or so. However, today we've seen it top out around about 1913. Now, this was the level we hit, or just below here, in June this year. We got up to 1916.60, and we've stalled just in front of there, turned around. So on the daily chart, it's forming a shooting star candle. So that looks pretty interesting. Let's see if we can get some shorter term look on that. The 4-hour candle is bearish outside candle, so that looks pretty negative to the sort of like to show that maybe this run has come to an end. But until we break the support around about really the 1880 level, for me, we still would be looking to for this area to support. A break below 1880 opens up the downside. On the longer term chart, I still feel that we've got levels below which need to be retested. We haven't I've drawn this resistance in, comes in at 1916.62. That would form the double bottom, which we could really sort of like see the measure move target on this at 2155, which again I think is a Fibonacci projection level that I worked out a long while ago, but I'll have to dig deeper into that to have a little look. But yeah, that covers off my markets. Joe, if you want to follow through with the FX. Oh, looks like Joe's frozen again. Poor old Joe, not having a good time. Let's follow on with FX. I'll start on FX, show you what I think, and then Joe maybe can follow up and show you what he thinks. Let's drill down into this. So starting off really, the euro really sort of like struggled to get above the resistance, coming in at 113.95, and has collapsed lower yesterday. We saw the sell-off where the dollar sort of like found a little bit of a safe haven bid again on the back of the Ukraine-Russia situation. But in the last hour or so, we've seen a turnaround in euro dollars fortunes, euros spiking to the upside quite aggressively. So maybe there's some sort of something to pacify the markets at the moment. Seen the same with cable. We stalled this morning at 135.56, and we've rallied back up 135.86. So nice little short-term turnaround in sterling dollar also. Take a look at dollar index. You can see the sort of like the bearish outside candle on the 30-minute chart. Seen it on also the 4-hour chart. The 4-hour chart looks a little bit toppy. We've got this evening doji star formation and the correction lower. It's engulfed the last 3 candles, so it looks pretty negative from that perspective. So potential for the dollar to have a little bit more of a correction lower this morning. On the dollar yen 4-hour chart, we see we've stalled on the sell-off, 114.50. We've moved back up over the last 4 hours, 114.90, and settled back down at 114.80. So does look a little bit of a bottom on the candles. These like bullish hammer candles, although they could also be doji type candles, but looks a bit supportive. Really needs to get back below 114.50 for this downward trend to continue. Apart from that, we could expect a little bit further on the upside from dollar yen. Aussie dollar, a little bit sideways really. Triangle formation, looking for a breakout. We can actually take it back to even to back here. Nice little triangle formation taking place over quite a few days. Really looking for a breakout. As you approach the end of the triangle, you should get a breakout around about this area. And if we go back historically, you could say that this was after a real downtrend. We've got this triangle, so maybe looking to break lower. Might get that fake up first, but resistance should come in at 72.27 and 72.50 before the breakdown lower. So that's what that's us covered off on the forex. Joe's missed his opportunity. We're still talking about the commodities on the actual chart, but here we go, gun to head. So I've got a note of where my gun to head was yesterday. I took a look at the well, what was I selling? I was selling gold. Let's see how that played out. On the 30-minute chart, looks like I was stopped out in gold, unfortunately. Started off well, started to move lower, got down to 1892, and we saw this big spike up. Thank you, Mr. Putin, for that. So, but we're back down to them sort of levels. Yeah, still feels like that's the sort of approach you want to play, but the volatility in there is pretty interesting. Now, the last hour has really messed with everything, and potentially we're looking at the indices rallying against the sort of like short-term trend, and gold selling off against the short-term trend as well. So we're getting a little bit of backwards and forwards on this. Cryptos looks to have sort of like stalled, possibly forming a correction, but the volatility really could play out either way. Let's take a look at indices. Is this indice rally going to continue? Well, my favorite trade really at the moment is trying to sell rallies in NASDAQ. So I'm going to go with that today. I'm going to set shorts around current levels, 13,716. Keep quite a tight stop. And look for really a break lower. Let's get a bit aggressive with this. We're going to have a really tight stop, 13,766, targeting a move to 13,466. So if we do get anything kicking off Russia, Ukraine, then I'd expect this to extend lower. There's plenty on the downside for these indices. Following on from there, let's take a look at what we're expecting out later. Busy calendar, 9 a.m. We've just had the German IFO index, and 2:45 are expecting US PMIs. February flash indication, manufacturing expected to fall to 54.4, services to rise to 51.4, and at 3 p.m. US consumer confidence index to fall to 110 from 113. Obviously, the US dollar being impacted by both those. So sorry we couldn't get Joe's gun to head trade idea we'll fill you in tomorrow on how Joe got on yesterday, and we'll crack on again tomorrow. Good luck with trading. Take it easy out there and be careful. Thanks.